What's accounting, essentially, for a business owner?
The art of recording, classifying, summarizing, and interpretation of transactions.
Accounting gives you the better eye view of how good you are doing. The main goal of accounting is to make decisions. So in making decisions, it gives you clarity to make a very good decision. There is a law that says that every person is required to maintain records.
So I don't know if Ghanaians have developed any accounting software. You need to know at a glance where you are. Whatever you own that will last for minimum 1 year is an asset. We have long term and we have short term. We have non-current and we have current.
What are some of the decisions a business owner can take from looking at their balance sheet alone?
You cleared from 4 million to 0.
Yeah.
I'll be interested after this conversation how you're able to do it.
I'll show you.
And if you also don't keep proper books, it makes it easier for GRA to tell you can't enjoy modified taxation.
Yeah.
Because they can look at you, they walk into your shop, they look around, they are able to value about 1 million worth of items. There's no way you can convince them that you don't make more than 200,000 a year. You can only convince them when you have proper records in place. Keep proper records. I advise that you get an accountant. Don't be afraid of how much they are going to charge you. The benefits far outweigh the cost.
Hi friends, so this episode is a Toolkit episode. As you know, our Toolkit episodes are more directed towards the do's and don'ts and the technicalities of running the business. And today the subject matter was on accounting and partly on taxes. We had two consultants and should I say experts in the field to speak to. Samuel has already been here. Samuel is with Asono and Kofi is with Nkuntable Consult. Great conversation, lovely conversation, and great takeaways. And I hope you enjoyed the conversation as much as I did. As our mantra remains, just build something. And in light of our existing conversations and partnership with WeWire, this is a WeWire Toolkit episode, guys. So exciting times ahead. Enjoy the conversation. So, gentlemen, thanks for coming.
Thank you.
So Zanuti today is your second time here, so
Yeah, of course.
Kofi.
Yeah.
Kofi and I have interfaced on both of you have interfaced with on a very professional level. Kofi more recently. Kofi put a very interesting short period external audit for me. And I'm very grateful for that. Very sharp guy.
I hope my regulators are not watching.
Yeah, they are watching, I'm sure.
They will be interested in how short
it was. So Kofi is the lead consultant at Nkuntable Consults. Kofi Dapa. Zanute is the lead tax and accounting consultant with Asono. And today I think what I really want us to explore is, we've touched on taxes with Samuel, but today more so on accounting and why businesses need to, businesses and individuals need to keep accounts and the need for that and some of the technicalities of, keeping accounts, right? So I think right off the bat, I would want to ask, what's accounting, essentially, for a business owner and for an individual? So, Kofi.
So let me try my senior high school definition of accounting. So basically, accounting is the art of recording, classifying, and summarizing significant events of a financial nature and interpreting them. Yeah.
Okay.
So recording, classifying, summarizing, and interpretation of transactions. Yeah.
Transactions. And that being to go, why is it important for me as a business owner? Why do I have to keep accounts?
Well, someone said accounting is the language of business. So if you want to do business, you would have to speak that language because you would have to know where you are coming from and where you are going. And accounting gives you an overview of how, yes, that's where you are going in terms of money-wise. Even NGOs, when they set up, the objective is not to make profits. At the end of the day, they want to stay afloat at a certain level. So accounting will help you see or give you a picture of how you are faring and how you can put one or two things in place to increase the bottom line.
Zanute.
Yeah, so basically, business people like to have clarity in whatever they do. And one of the areas of having clarity is to see your books, to see how well you are doing. So accounting gives you the better eye view of how good you are doing. What are your inflows? Where are they actually going to? Did they bring back returns? What is your profitability? What is your assets level? So it's sort of the main goal of accounting is to make decisions. So in making decisions, it gives you clarity to make a very good decision. So that's, I think for me, it's like the baseline of why we need to keep books and why we need to do my accounting.
Yeah. I think even prior to this conversation, I think Kofi shared a note with me, and in the note it stated that you have to keep accounting because it makes you investor ready. It makes you attract. It helps you attract investment, and that's true. Oftentimes I've had the privilege of raising capital from investors, and the first thing anybody will ask you is, "Can I see your books?" Just to give confidence. And also, I think in my little stunt as a little investor here, and when people approach me with their small businesses, it's like, okay, well, for me to validate anything at all, I want to see that, okay, well, money is actually coming in. Where's the money going? What are your profit margins looking like? So, essentially that's it. So we know there are forms of businesses, right? There's a sole proprietor, there's a limited liability, there are partnerships and all of that. How do these businesses, or how should these different businesses keep their books? What are the basic things they have to know to keep their books? Do they differ across board, or there's a particular way somebody who runs a sole proprietorship should keep their books? Will it differ from how someone who runs a limited liability establishment keep their books? What's that? Or is the same thing that cuts across? Hello, community. Sorry to interrupt this conversation. So just to give you a certain subtle announcement, we already mentioned that we're working with WeWire on a couple of interesting things for you as a community. One of them, as it stands now, is a live event. We're going to share details soon, but then, just to keep you excited, like we said, WeWire is a B2B payment platform that allows merchants to make cross-border payments. And so, exciting things coming to WeWire. Now to the conversation.
So let me just. So one thing that cuts across is record keeping. So when you take the account of a company, of a partnership, and of a sole trader, there's one thing that is seen across. Each of them keep records, right, to back the accounts that they have. So if you see an account statement that has let's say revenue, cost of sales, expenses, each of them is backed by a source. So in accounting, there's something called source documents, which is like the source of what you have there in your books. So you say you have something very basic like electricity, proof. Where is the bill? Let's say you traveled. Where is the ticket? Right. So these things are stuff that cut across. And for me, it's like the most important thing in accounting, because if we decide to go back to the roots, how did you generate those figures? Okay, you say you have maybe truly we can see in your bank statement that you probably transferred 2,000 to something. What is the proof that 2,000 is probably payment for electricity? So there has to be a source document. There has to be a basic record which is kept to back each number. So record keeping seems very easy, very mundane. Most people, and for me, one of my experiences, most of the businesses I work with overlook that because they feel like record keeping. I'll remember.
Yeah.
But then it is like the basic thing. And to go into tax a bit, there is a law that says that every person is required to maintain records, and this one is not for it's not for a particular kind of business. It is for every business. So the obligation to keep records, basic invoices, receipts, contracts, bank statements, basic requirements like this is on everyone. So to answer your question, one thing that cuts across, which I deem very, very salient, is the keeping of records.
Of records.
Which leads to the what we call the accounting proper. So there is maybe 10,000 invoice, but how are we going to recognize it? Maybe we are not even going to recognize it in the same month. Maybe it has to be spread over ABC, right? So before we do that, those gimmicks, those in quotes gimmicks, there has to be something to back it, which is the records.
Record keeping. So, for example, before I come to Kofi, so you're saying record. For example, I run a business. A way I could keep my books keep the books is have a Excel table that I put in everything raw like that. Does that count? And then I keep the receipts. That's what you're referring to.
So that is like the first point.
Okay.
First point. Now, as an accountant, when I come to you, well, I'm not expecting you to have a magnificent bookkeeping stuff. At least there should be something that I can reach out to. Okay, there's an Excel sheet, 100 list of things you've spent on with receipts. I'm fine. From there, I can prepare something reasonable.
Okay.
Right. So record keeping looks easy, but it's actually the most needed part or the needed step of an accounting process. And I think from what he even defined, the first step was the record keeping.
Yeah.
So you need that all the time.
Kofi?
Yeah, I mean, basically that. And you see, you spoke about whether it cuts across. For me, the distinct factor would be whether you are a startup operating on a small scale, on a big scale. If you are a startup and you're operating on a small scale, you may not be able to afford these QuickBooks and their subscriptions and Tally and stuff. So you can go manual. You either keep it a manual system or a computerized system. The manual is like an Excel.
Okay.
You record everything. Or even your mobile phone. You don't even need an Excel. Because most of the times, the problem is that I would remember. So when I go home, I'll sit behind my computer or my laptop but you forget. So if you have a phone, you bought something 800 cedis. Just record. I bought stationery 800 cedis. And that is it. So for me, if you are a startup, and I'm sure most of our audience will be in that category, just look at starting with something very basic, your mobile phone, your laptop. You record every transaction. Then as you scale up, I mean, you started with 5,000 cedis a month as your sales. If you move to 200,000, I don't expect you to be still keeping a manual form of accounting system.
Yeah.
Get a QuickBook, get a software. I don't know if Ghanaians have developed any accounting softwares because I keep on recommending QuickBooks and Tally. Zoho is Ghanaian, right?
No, it's also
Nah,
Ghanaian.
no.
Ah, okay. So I'm sure if someone knows of a Ghanaian accounting
I'm
software,
trying to.
Built.
I'm trying to.
I know there is Built.
Built. Yeah, I don't know.
Built is
much
a
about
Ghanaian startup.
them.
Built.
probably it's also an opportunity for the guys in the space, to reach out to some of these
Yeah.
people. But every now and then someone will ask you, how do I record? Is there any simple software you recommend? And we go back to recommending QuickBooks and Tally. But if you have Ghanaian accounting softwares, we would gladly recommend
Yeah, I think
them.
Built is a Ghanaian-based software.
I feel like I know one, but I'm not recalling.
Yeah,
I think I may have interacted.
I was
with
even this
someone.
one. They start with a K. Forgotten the name as well. But yeah, so cool. So manual bookkeeping, computerized bookkeeping. All right, interesting. So now I've kept my books. I know there are, from my experience, there are certain statements, important statements of accounts. There's the balance sheets, there's the P&L or income statement, there's a cash flow statement, right? And I want us to explore those three statements and what they mean to, say, the business owner, and whether on a small scale or on a big scale. What are the things they could look out for on those statements to help them make decisions, right? Or even when they come across these statements, what does it mean? They can read something, they can make meaning of the statements that an accountant has prepared for them. Yes. So I think we start with the balance sheets, my favorite statement. So we take
Why is it your favorite statement?
I think it
Sounds nice.
not really. It just gives an overview of the assets and the liabilities of the business, just like a certain bird's eye view of things, right? So
it's like it shows the wealth.
exactly of the business,
Yeah.
where you are sitting, whether you want to, okay, let's focus on this. I mean, the P&L is also, it makes more sense on like on operational grounds, things you have to reduce the cost on and stuff like that. But then I'm
balance
excited.
sheet is like the cracker and say this is where we are.
Yeah, so I think let's touch on that. So what's the balance sheet? Let's before we say.
Statement of your assets and liabilities or your
Okay.
net worth.
Okay.
Yes, because as I said, you need to know at a glance where you are. And so if you want to know how much you have by way of assets,
What do you mean by assets? What do you mean by liabilities?
okay. Assets, assets here, Japade.
Let's try not to make this an accounting
Yes,
class.
I'm trying to break it down
Yeah.
so that our viewers would
Yeah.
appreciate. So whatever you own,
Yeah.
that will last for minimum 1 year is an asset. We have long term and we have short term. We have non-current and we have current. Non-current is like your furniture, your
The cameras.
computer, the cameras. Then the current will be your inventory, your stock, your cash, your bank, your receivables. Yes. So
So
these are
essentially, the current are the things you have that you can quickly let go to get receive
Liquidate.
money.
yeah.
Yes.
So if you even look at the balance sheet, it is presented by way of how easy it is to liquidate. That is why you
by liquidate, you mean
Turn
lose
to
get-
cash.
turn to cash. Yes.
then your liabilities also, you have current and non-current. So the liabilities, or should I say those who finance your business. You see, you are either financing the business from your own wealth or what you own or a third party. And so the balance sheet will give you a summary of how much you have contributed to the business and how much third parties are also contributing. Yeah, so I think that is basically that. Yeah.
Sorry.
Balance sheet. So better. So like I'm saying, it gives you the wealth of the business. So there is this thing we call balancing, right? So the wealth of the business can be looked at from the asset point of view. So when we say asset point of view, how much, what do I own? What does the entity really own? So you look at the asset side and you're like, okay, we own these assets. So at least it gives us an understanding of how much our worth, right? And it has to be the same as if we are being financed by our own money or a third party, right? So whatever you have, what asset you have, so it's like these assets we claim we have. How did we have it? How did we get it? So it has to be the same as what we received. Okay, we received loans from this bank, we received equity, we did some IPOs, we received share equity from these people. We've made profit so far of maybe 2 million. So that's part of our equity. So the whole point is that your assets, which is like your wealth, equates to what financed that asset,
Okay.
equity and debt.
Okay.
So if you don't have debt, okay, then people are like, okay, then I think for me, if all your assets is financed by zero debt, for me, I think it's okay because you don't owe anyone, you don't have any obligation. There's no instance where someone can come and seize your assets because you are owing them. So yeah, so the decision is personal. So my decision on viewing a balance sheet might be different from his decision and yours.
Yeah, it's good you mentioned you mentioned decisions, because I was going to ask you that what are some of the decisions a business owner can take from looking at their balance sheet alone? You know, practical decisions that the balance sheet will guide them to make. You know, the decision, the kind of decisions you can make when you look at, say, your income to your P&L is different from when you look at your balance sheet. What are some of the practical decisions that, okay, say, well, we run a podcasting studio, right? Looking at our balance, what are some of the decisions the balance sheet will help us make?
Well, Sammy sounded like he's risk averse, so he doesn't like debt.
I actually am.
But for me, I doubt whether we can get the 10 richest people in the world, whether we can get 9 of them
Who are not in debt?
who are not in
Debt.
debt. I mean, and in finance, we say debt is cheaper.
Yeah.
So, for instance, you want to scale up this podcast. You need some equipment. You have the money, all right. But I will advise you, instead of taking your 2 million cedis and investing it in this, why don't go to a bank, go for a loan, pay over 5 years? Then you still have your money.
Yeah.
At the end of the day, when you go for the debt, it's not as if, like Sam said, tomorrow they will call you, no. Because, I mean, in essence, you will not intentionally go for a loan from a bank and decide that you default. So you put systems in place to ensure you would pay back. In fact, even before the bank gives you that loan, they will ask for your balance sheet, financials. So if you look at your balance sheet as a business owner, it will help you decide, okay, so do I invest my own money or do I go for a loan? Remember, the balance sheet will also give you your equity, the equity of the business. So we have retained earnings, just a summary of how much profit you've made over the years. And if you think that you have enough in there which cushions you, you would you can decide, okay, my figures are okay. I've invested so much in the business. I want to scale up. Instead of going further to invest my own money, let me go for a facility from a finance house or from a bank. So it makes you take strategic decisions. Yes, strategic decisions. You know, I've interacted with a lot of people who've made money without accounting. But I always tell them that, no, you are applying the accounting principles. They are the ones who will tell you that, oh, I started on a table, now I have about 20 warehouses. But manual accounting. And I tell them, no, you did. See, those people are very smart. It's like those who sell, like the charcoal sellers, the food vendors. They are accountants in their own right. They know how much they've earned. They know how much they are spending. But the problem is, because they are humans, they cannot keep anything. And for most of them, as long as he opened the shop and he was able to sell about 20,000 worth of goods, I'm fine. In fact, some even equate sales to profit, which is not. So it is always important that you look at your balance sheet where you are, then you take strategic decisions based on it.
Interesting.
Yeah.
Hello, friends. A quick pause before we continue the conversation. If you're enjoying this conversation, kindly hit the subscribe button. Also, do well to share this episode with a friend, and if possible, leave a comment in the comment section. This goes a long way to help the team and motivates us to bring you great content every week. Now to the conversation.
So to comment on retained earnings, so I'll make reference to the income statement. Income statement might show you a very huge sales. Maybe revenue is so huge for the past 3 years. But what is retained earnings? Retained earnings is basically accumulation of their profits. So let's take the first 3 years. You've made huge sales, but retained earnings is small. So that means that you may be making more sales, but you are spending too much. So in that situation, your profit accumulated for the past 3 years is not enough, or you don't have enough equity. So the question I'll ask is, why are you making so much but spending like literally everything? So balance sheets, basically for me, what I mostly look out for is retained earnings, profitability.
Okay.
Why are you not making so much profit? And it's not as if when you are not making so much profit, it's a problem. If there is reasonable justification as to why, it's fine. Mostly people look out for profit as though it is like an immediate thing. Yes, everyone needs that. But if there is reason, if there is grounds to show why we are not making the profit now, but later, then I think it's fine. So the decisions cut across. Everyone has a question that needs an answer.
Yeah.
So what is your question? So mostly before you go into a pitch or something, you most probably should know what question they might ask, or you should have an idea of what is expected of you, right? Then you channel your pitch. I think I'm now beginning to advise on how to pitch, but you sort of channel your pitch on what will be asked, because sometimes when you watch Shark Tanks, what Mr. Wonderful will ask is not what Mark Cuban will ask, right? Even though that sometimes they ask the same thing, but they all have it's more like an individual preference, right? What is the question of the one giving you the money? and what is your answer from the balance sheet or from the income statement or from whatever.
Yeah. Interesting. It's good you mentioned income. I think we just segue into the income statement, also known as the P&L, right? Profit and loss statement. So, what are the elements on the income statement that we have to take note of? What does it mean? What does the income statement tell us? Think start
Basically,
Kofi or you?
income and expense. so like I was saying, the income statement is to find profit, is to assess profitability, right? So how do you get profits? Income, expense. So first line item is your income, revenue, or turnover, whichever way you want to call it. And what is mostly called the cost of sales, but I call the cost you incur to make that income. So let's take this, right? We incurred specific costs. Like without some costs, we would not have done this podcast today. So even though we bought it feels like I'm about to go deeper. Okay, so even though we bought this camera, right, which we will not fully deduct the full cost this year, the depreciation of this camera will form part of the business costs or that cost of sale, because without this camera, we couldn't have the camera, the light, the speakers, and all of these things, right? So we have the income, we have the business cost, or people who do merchandise, the cost of the asset itself. The cost of the stock itself is what made you make that income. So there is the income, and there's a business cost. Then there's other costs. So utilities, so mostly what we call overhead. So a cost that is over every other thing. So utilities, fuel, transportation, bank charges, all of those costs, right? If you have loans, interest, then we come to the almighty tax. So after you get your profit, based on the jurisdiction you are, or based on the business you do, the relevant taxes are applied on you to pay. Then you come to that interest, which is the profits. That part that interests most people. Now, to go back to the law I quoted earlier on, or I paraphrased, if you don't keep records, so the funny thing is, that law is Act 915, the Revenue Administration Act, Section 27. If you don't keep, so it says you have to maintain records. When you flip the coin, Section 72, if you don't keep these records, there are penalties, right? Okay. So it's kind of going back to buttress the fact that you have to maintain,
keep records,
books. You have, at least there has to be the basics.
There's a legal obligation.
There is a legal obligation on you to keep them. So a way you can reduce that cost, that penalty, is to keep books. Like the simplest way. So you might want to make more and more profits, but like don't incur some penalties, or don't incur some taxes that you can literally avoid by keeping books.
Okay.
So yeah, so there is the income, expenses, the business expense, and virtually other expenses that brings us
to.
And
there are taxes. So
there are taxes.
Total revenue, and then from there you subtract your
your business expense,
cost of goods sold, and then other cost of sales, and other business expenses, right?
Yes.
So including salaries and all of that.
Everything.
Okay, and then
so the balance sheet records more of things that may last for more than 1 year.
The balance sheet.
Yes, but when you come to the income statement, the only things that are recorded there primarily are things that happened during the course of the year.
Okay.
Just that bit.
Okay.
Yes, I think that is so, because you have your income, you have your expenses, and you have your tax for the year, and the tax provision for the year. And so the income statement is just like a picture of what happened during the year.
Okay.
Whereas the balance sheet accumulates things that have happened over the years.
Yes. Yeah. So can't you have like an income statement that spans about a 2-year period?
Oh, depends. So, for instance, we have when we are doing what we call due diligence, mergers and acquisitions, there are times that income statements may be presented at, normally you just show the current year and the previous year, right? But there are times where you present a 3-year period.
Okay.
But per the accounting standards, you are supposed to show 2 years.
Okay.
Yeah, current and the previous. Yeah.
Interesting. I want us to go into the third statement. Even before, we've already touched on what the income statement does and what it tells us. What's the difference between, before I forget, accounting and audits? I know you, Kofi, on the basis as an auditor, right?
I'm an accountant first. My first employer was very, very, how do I even put it, considerate, or they gave me the opportunity to do all the arms of accounting. So I started with accounting, I did auditing, then I did tax.
Okay.
Yeah. So that is it.
So what's the difference between accounting and auditing?
So accounting is historical. What have happened already. The law demands that you get a third-party opinion on what you have done. So Sammy is the accountant. He has prepared the financial statements. Then I come in to express an opinion on what Sammy has done. Let me say, auditors do not catch thieves, as some people who auditors now, but no. We are just in to express an opinion as to whether the financial statements show true and fair view.
True and fair.
Okay.
Okay. It doesn't mean it is 100% clean. But what we say is that per the records we have, we are satisfied with the records. And we think that it shows a true and fair view. So accounting is the reporting. And the auditing is expressing the opinion as to whether the reporting gives a true and fair view.
Okay.
Yeah. Of the business.
Let me go further before we go to the third statement. When you mentioned that your first employer made you touch on all the wings. I mean, Samuel is familiar face.
Yeah.
We know Samuel's background. Probably you touch on it a little, but to you, Kofi, give us a little background. Who you are. I know you're a Kumasi person. You grew up in Kumasi.
Born, bred in Kumasi, and I'm making money in Accra.
I like that.
Cool.
Thank you very much.
So which school did you go to in Kumasi?
I started at Mofratro girls boarding school, but I was not in the boarding house. I was a day student.
That's interesting. One called that school. Sorry for you.
Oh, if you care to know, Mofratro is the school of the first female Chief Justice of Ghana.
Oh, okay.
Sophia Kufu also attended Mofratro. In fact, Mofratro was the quickest route to Wesley Girls High School.
Okay.
Oh, yeah.
Yes, the Mofratro. Yeah, you can Google it.
That's true. Yeah, we get that.
Yeah.
And senior high school?
The Opokuwari. In fact, I was privileged and fortunate to have gained admission at Opokuwari School.
Oh, okay.
Yeah,
Okay.
So,
Very unfortunate.
Very unfortunate still.
well, you see, because both of you attended St. Augustine's.
Of course.
Monkafra.
But I mean, the Calix school connection. So
Okay.
I will give it to you for now.
You are give to me.
Yes. So from Opoko, I went to the Cape Coast University.
UCC. Okay, so the two of you went to UCC.
Yeah, that one there I would give to him.
From Ogasco, he came to UCC.
Yeah.
I thought you go to Oxford.
Oh, Charlie.
Someone and I used to have like a running joke in senior high school. In the same dormitory, anytime we see each other, so we see Harvard. We were so sure we were going to go to Harvard after Ogasco.
In fact, let me tell you, there are two schools in the whole world that are very unique: Opokuwari and Oxford. Because when you are admitted to Opokuwari, you are given a unique number, same as Oxford. More marking now, you can't do it. All right. Okay. Yeah. So at UCC, I did become Bachelor of Commerce.
Okay.
Same
Then after UCC, I thought I was done with accounting. I wanted to do things like this.
Okay.
I wanted to be a journalist.
Oh.
Then that's another story for another day. But I pursued ICA. Was admitted as a member in 2015. Then I did SIMA. Then I did tax.
Okay.
So I have touched on all the arms of accounting.
That's interesting.
Yeah. Proud of
so,
you.
An authority in his rights, you know. So,
and a little bit about let me pay tribute to my employers.
Okay.
So I first worked with PKF, Panel Care Foster.
All right.
One of the oldest accounting firms in the world.
The world, yeah.
Yeah. Then I think I did 12 or 13 years at PKF. Oh. Then I said to myself I needed a Big Four experience, even if it's for 1 week. So I joined EY, Ernst & Young. Then after some time, I decided I would do my own private consultancy. Yeah.
That's interesting. Great. Great.
That'd be nice.
Must be nice. Anyway,
Let's go to the third statement.
so the third statement, that's the cash flow statement.
Yeah.
Tell us about the cash flow statement.
Okay, so the cash flow reports on the movements in the balance sheet, and income. Just to let you know how you utilized your cash. So, and it's divided into three. You have the operating cash flow, you have the investing cash flow, and the finance cash flow. So, you would want to know how you fared in terms of how you were able to move your receivables, your payables, how much you invested in your assets with cash. So, the income statement gives you something like a general performance, but the cash flow helps you know how you utilize your cash and how there have been movements in items on the balance sheet.
Okay.
Basically, that.
Nice. Sammy?
So, correct me if I'm wrong. People mostly, for me, I feel that cash flow, or no, not even for me. Cash flow answers one question, which is scenario based. So you say you made profit of 100, but in your bank and in your cash you have 80. Where is the 20? So cash flow sort of answers that question.
Oh, okay.
Because in your profits, you say you made 100, or you make. So the whole point is that the difference in your profits and your cash comes from some items like maybe notional expenses, like depreciation, provisions of expenses, movement in your current asset. You bought some assets. So the question it seeks to answer is the difference in your profit and your cash. Because in an ordinary state, say you made profit of 100, show us how come you don't have the 100. So it is showing you why you don't have the 100, what that money was used for. Maybe we've used it to buy something that we are not going to account for this year. Something like depreciation. We may buy an asset and we may not fully account for the cost of that asset in the P&L, but we'll just account for the depreciable part of it, right? So to answer that question, there are certain factors that causes the profit reported to not be the same with the cash you have. So broken down to the three: operating, investing, and financing. Yeah, which should balance with the cash you have.
It's like whatever
the favorite
you did,
word in accounting, balance.
It's like the effect of whatever you have done on your cash and your cash equivalents.
Okay.
Yeah, that is it.
I see. And so with all these three statements, is there a frequency?
We also have statement of equity.
Tell us.
That gives you, so as the name sounds, equity. So your accumulated earnings, you have your retained earnings, you have your capital supply. I don't want to be very technical. I want to break it down. So it gives an overview of how much the owners of the business have, or the stake they have in the business. Yes, that.
Okay. So with all these statements, is there a frequency to which we have to have this statement prepared for us as business owners? So should I do it monthly? Should I do it quarterly, annually? How does that look like?
Okay, so for something like your statement of comprehensive income, or your P&L, and the balance sheets, and maybe the cash flow, just these three statements, or let's even add the statement of equity. Legally, or by way of accounting standards, you are supposed to be reporting on regular basis, annual basis. But for decision-making purposes, I do advise you can do it on a monthly basis. In fact, you can even do it on a daily basis.
Yep.
Yes, you can even do it on a daily basis, especially your P&L. Just show your income, break down your expenditure, and see how much profit you have made.
Okay.
Yes. So there's no hard and fast rule, but I mean, as a business, at least at the end of every year, you are supposed to prepare all these financial statements. Yeah.
Interesting. Now, I mean, you mentioned, maybe you're talking somewhere, you mentioned that keeping these books is a requirement. to fulfill our tax obligations, we have to prepare our books. I think let's touch on tax a little. We've done taxes a while. I mean, is there something you want to tell us? From a previous conversation, any gaps you want to fill?
Before Sami comes in, he keeps on making reference to it's a legal requirement. You have to keep your books. If GRA is supposed to enforce this part of the law, I'm sure I'll be living in Trasaco. Because everybody
No, don't say we now.
Yes. Because, I mean, that part of the law is not
Really enforced.
really enforced. And mind you, when GRA comes and you've not kept your books, I mean, it has implications. Number two, you give them the free will to use their best judgments
Yep.
to assess you for taxes. So it's very, very, very important. As for the accounting bit, if you do a good setup, you can call the accountant after 12 months and he will prepare a financial statement for you. But with taxes, every transaction, every day, whatever you are doing has implications. So I just want to put that across. And if my GRE friends are watching me, they should please enforce that part of the law. Every
so you can get
business
Trasaco.
person, yes, every business person needs to keep proper books. I mean, that's on the lighter side, but every business person, it's not only for tax purposes, it's for your own good.
Yeah.
So that you know where you are going. Yeah.
I think on the pamphlet you shared with me, the couple of tax implications. The last time we were here, we touched on the income tax, the VAT, the income tax. But we talked about like the company taxes, and then like the sole proprietor taxes. But recently, I've seen a new strands you shared. Would you want to touch on that in the pamphlet you shared with me?
Okay, so you spoke about corporate tax.
Yeah, we have.
PAYE. There's
PY not so much. I mean, we did.
Okay.
Little.
POI was for like when you have stuff.
And also we have withholding taxes. So when it comes to VAT, you the business owner, if you meet the threshold or the requirements, you have to do the VAT and you give the money to government. But when it comes to withholding taxes, that is what I'm saying. It's very strange when GRA comes, because if for nothing at all, withholding taxes is a place where they will get you. You are supposed to do the withholding. So, for instance, it costs us...
Kofi wants me to explain.
No. Not on set.
Not explain on set.
Not on set. I mean, just like playing football. You score and you are scored. So when you are dealing with GRA, you win some, you lose some.
You lose some, yes.
But for them to go to zero, some yapping. So with withholding taxes, the onus is on you, the person doing the payment, to withhold.
Okay.
And that is very difficult in our settings, because there's a lot of tabletop transactions, and most of the guys we deal with are in the informal sector. So if you go to Makola and you make a purchase of 2,000 cedis or 20,000 cedis, and you look at the face of the person doing the sales and you tell him, I'm going to withhold 3%, they'll tell you, Famade Mame. So you either pay the right amount and you go, or what happens then is that you take the cost of the withholding, which you are not supposed to do anyway.
Yeah.
And for your peace of mind, you take it upon yourselves and you give it to government. So withholding taxes is another area that businesses should be on the lookout for.
Okay.
If you are engaging anyone, whether the person is a casual labor, a full-time employee, there are tax implications. There are withholding tax implications, which we must look at. I mean, when you invited me, I decided to quickly put a starter pack together.
Yeah.
Because I think for the past 15 years, every now and then I do this. If I'm invited programs at church, I'm meeting individuals. Oh, so where do I start from? So I decided to put something small.
Yeah.
I decided to make it very simple, very short. I was telling Sammy that I had a lot of information. But I know a lot of guys are not really interested in all those things.
The classroom.
They just need the awareness. So what I have done is to just create the awareness, something very small.
I think what we can do is that we will put it in like on a Google Drive and add it in the comments when this episode is, so people can access it.
And if you also don't keep proper books, it makes it easier for GRA to tell you can't enjoy modified taxation.
Yeah.
Because they can look at you, they walk into your shop, they look around, they are able to value about 1 million worth of items. There's no way you can convince them that you don't make more than 200,000 a year. You can only convince them when you have proper records in place.
So, Kofi, final words.
Well, as I said in my starter pack.
But before that, how do we reach you? How do business owners reach you? So your LinkedIn is
I'm on LinkedIn, Kofi Kusidapa.
Kofi Kusidapa. Okay. Of Uncountable Consult.
Okay, yes. Okay, so keep proper records. I advise that you get an accountant. Don't be afraid of how much they are going to charge you. The benefits far outweigh the cost. And I'm always available.
All right, community. That was a great conversation with Samuel and Kofi, and I hope you enjoy the conversation as much as a very insightful conversation. And as our mantra remains, just build something.